Hi there, I'm Champion Trader Kevin Davey, and today I'm going to give you a way to trade the S&P futures with weekly bars. So let's get started. Okay, so I'm going to create a strategy, an ES strategy, and that's the mini S&P. I'm going to use $5 commission, $25 round turn slippage. I think it would work on most stock indice futures. I didn't test them. You'd have to try it yourself. And maybe, since a lot of times stock indices act differently than other markets, maybe the opposite would work for some other markets like gold or soybeans and things like that. At least you could try it. And this also will work on the micro E-mini. You just have to adjust the slippage and commissions, but you should get good results with that too. And I should point out, I tested multiple years for this strategy, but it did not go through my complete trademarked strategy factory strategy building process. So what I did is, this is kind of a shortened test. This is my whole process that I use, the one that I teach in my course. And so I'm just going to take pieces of it to build this strategy. And here it is. So like I said, it trades the ES, it trades weekly bars. And it also uses a second data stream, which kind of makes it a little unique. And that uses the 30-year Treasury bond future, which is at US in TradeStation. And this thing is definitely long biased. So a lot of strategies I create, I like to make long and short equally. But this one is definitely biased to the long side, which for stock indices, hey, that's not that bad of a thing to do. So the code in easy language for TradeStation, you should be able to understand this and translate it into whatever language you want. It says, if the close of the 30-year bonds is the lowest close of a certain look-back period, if that is true, then you want to sell short. So the lowest close of a certain period, sell short. And if it's not the lowest close, then you go long. And as you can imagine, most of the time, the 30-year bonds are not going to be at their lowest close. So therefore, it's mostly going to be long signals that are being generated. But that's the whole strategy. I didn't put a stop loss on it. I didn't put a profit target on it. You can always try to add those, but I just like to keep it simple. And here's some sample trades. And you can see it's always in the market, long or short. And since it's weekly, it tends to be in trades for a fairly long time. So if you look at this one trade over here, that's about 10 bars or so. So that's like 2.5 months. So you're in trades a long time with weekly ones, which I think is probably a good thing. This would be more for longer term traders that might want to use this. I picked the 6-week look back. I did not optimize it. 6 weeks are basically 1.5 months. And here's what the equity curve looks like through the end of 2021. That was when I developed it, finished development. And then obviously anything since 2021 was all real time after development. And here's what it looks like after that. And you can see it looks pretty good. I should also point out I'm using the @es.d symbol, which is the daily session. TradeStation, a special symbol for TradeStation, so it trades stock market hours. It is not the 24-hour hours symbol. So you might get some different results if you use that other symbol. But that's what it's looked like since I developed it. And again, here's what the strategy looks like. Pretty simple. The only complicating thing with it is that it uses the 30-year bonds as the signal driver. And I find doing stuff like that sometimes gives you an advantage, because not a lot of people do that. Not a lot of trading software can do that. Some people I know can't do that at all. So to have your signal based on one symbol, but you're trading a different one, sometimes makes it a little unique, and might be why it works, or it might help anyways. So talking about strategy building, I mentioned the steps I use. What you have to realize is most people who build strategies do things incorrectly. An example of doing this incorrectly would be taking all that data where I did my development test and then optimizing for that look back period, and maybe putting a stop loss and optimizing for that. You got to be careful, and especially with weekly bars, because you only have 52 bars a year. So if you're looking at optimizing, there's not going to be a lot of trades that occur, and you're going to run the risk of overfitting or over testing. And that's what most people do. And like I said, they use too many inputs, and you saw how complicated this strategy was. Not too complicated. Most people will overcomplicate their strategy. And then finally, the big thing, I think, is be consistent with how you're building your strategies. And most algo traders, most developers are not. Some strategies they'll test a lot, some strategies they'll test a little bit, some they'll add extra tests. They'll do all sorts of things, but they're not consistent. And when you don't do things consistently on the test end, you're probably not going to get consistent results on real time, on the real time end. So using a proven process really helps you. So that's something to keep in mind. All right. Well, I hope you liked this video. If you did, give it a thumbs up. Hit subscribe. Leave a comment. Let me know what you think. I'm Champion Trader Kevin Davey. Have a great day.